Hello all. So today we try to cover our chapter number 8 and chapter number 9. Okay. Both of these chapters are comparatively very simple. Uh, have you guys completed our chapter number 7 reporting? Yes, no. Yes, great. Okay. Okay, no issue. Just try to complete it. Okay. Okay, so let's start with 9th chapter first and then we will move forward towards 8th chapter in this particular class only because both 9th and 8th chapter are comparatively very simple. Okay, so first we will cover chapter number 8. Sorry, chapter number 9. That is related to related services. Now I hope you all remember that when our essay class is starting, I have told you something about SREs. Can you tell me the maybe full form of SREs or what is SREs are related with? I've told you this thing in the starting of in the first class itself that there are two types of engagements, right? There are certain types of assurance review. Sorry, SRS. Sorry, my apologies. SRS, related service engagements. Okay, so yes, it is SRS. That is related service. The standard of related services. Okay, so it is related with the standards when our CA is going to provide assurance over the related services that is not related with our financial statement. Okay, not assurance on our financial statements. That is another other related services. Okay, apart from the assurance on our financial statement or historical financial data. Okay, so we will understand two kinds of SRS in this particular chapter. One is SRS 4400 and one is SRS 4410. Okay, so in 4400, we will understand engagement to perform agreed upon procedures regarding financial information. Okay, so agreed upon procedures. Agreed upon procedures means maybe management have contacted any professional, any CA, okay, and he told him that okay, there are some procedures that we want you to perform. Okay, there can be part of the whole financial statement, or there can be some anything agreed procedures. Okay, so suppose how will CA proceed because CA till now know only the standards of auditing. That okay, how to do auditing or standards of accounting standards. Okay, how to do accounting, but he don't know that okay, only this procedure if I have to do, then which standard to follow or what things to keep in mind before accepting such kind of offer. So for this difficulty, this particular SRS has come. Okay, this particular SRS has come, that is engagement to perform agreed upon procedures in the financial information. So what is happening here? The management is saying that okay, professional or CA, you have to perform this particular procedures. Then how the CA will proceed towards it, that we will understand in this particular SRS. And now there is a particular SRS related to compilation engagements. Okay, compilation engagements. What is compilation engagements, etc. That we will learn in this particular SRS. Okay, in this particular SRS, the related services. It is related with the only one services, that is compilation engagement. Okay, where the professional or the student has to make only compilation. Is it clear, guys? Are you able to understand what is SRS and agreed upon procedures and compilation engagement? And of course, we will learn more about it in this particular chapter. Okay. So first of all, a little bit of introduction. CA in practice often asks provide services to its client which do not include expression of opinion on truthfulness or fairness of a financial statement that is related to the auditing. For the purpose of standardization procedures to perform such non-assurance services. So what C is performing? C is performing certain non-assurance kind of services. The ASB of ICI has issued two standards on two different services, that is the standards on related services. Okay, and the following are the two standards that has been issued under standards on related services, that is SRS 4400 and SRS 410. So now, what is related services? Related services are the assurance engagement, means the engagement in which practitioner, now here in the particular essay, they are not referring to as a chartered accountant. They are referring it as a practitioner, okay, who expresses in conclusion designed to enhance the degree of confidence of the inherent intended user other than the responsible party about the outcome and evaluation and measurement of the subject matter against the criteria. Now, I hope you know the subject matter against criteria. This we have already covered in one of our chapters. Yes, no? Are you guys able to remember this thing that okay, evaluation of subject matter against certain criteria? Yes, in PSU. It means that practitioner gives an opinion about specific information due to which users of information are able to make confident decisions while the chances of information is incorrect. Um, Chances of information being incorrect is diminished. Means it is very unlikely that this particular information is incorrect. Not all engagement performed by the practitioner are assurance engagement. Now, there are some other kind of related services. We should say it as a related services. Other frequently performed engagement that do not meet the definition of assurance engagement includes what? Preparation of tax returns, right? Because no conclusion has been or no assurance has been expressed, like consultancy, like engagement covered by standards for related services. So all these things are what? All these things are something that is not related to the assurance engagement, where the practitioner, where the CA is not providing any assurance. These are what? These are related services. Right. Related services like what? Related services like filing of tax return, giving consultancy or advisory, or engagement that are covered under the standards of related services, agreed upon procedures, compilation of financial information, and other information. What are these? These are the related services. So now, what are agreed upon procedures? Agreed upon procedures, as the name suggests, in the engagement to perform agreed upon procedures, the auditor engaged by the client to issue report on factual findings, not his opinion. Okay, see the difference. Difference between assurance and difference between agreed upon procedure is the practitioner is only providing factual findings based on the specified procedures performed on the specified subject matter of a specified element accounts item of financial statement. Means it can be done either on any specific element and account item of the financial statement. That means the factual findings can be on either maybe trade payables, okay, on particular account, or maybe in the cash flow, etc. Okay, so what our practitioner is doing, practitioner is only giving a report of factual findings based upon the specified procedures. For example, an engagement to perform agreed upon procedures may require auditor to perform certain procedures concerning an individual item of financial data, say accounts payable, accounts receivable, purchases from related parties, sales, profit, a segment of entity, or a financial statement, say balance sheet, or even compare a set of financial statement. However, the person performing related services need not necessarily be the auditor of the financial statement. So it is not necessary that someone who is providing any assurance, who is performing this related services may not be the auditor. Okay. Also, it is not important for him to become independent. Okay, it is not important to become independent of the entity to perform these related services. Okay, in the simple terms, what do you mean by agreed upon procedures? Agreed upon procedures where client engages with the practitioner to perform certain procedures. Okay, to perform certain procedures and give the report. What he will give a report on facts, on factual findings, how they will find this particular fact by doing agreed upon procedures. Okay, are you guys able to get that what is agreed upon procedures? What are related services? What is assurance? Right. Okay, great. So now we can easily be able to start with SR 4,400 engagement to perform agreed upon procedures regarding financial information. SRS 4,400 provides guidance on um, auditor professional responsibility when engagement to perform agreed upon procedures regarding financial information undertaken or in content of report that auditor issue in connection with such engagement. Now, what is the objective of this particular SRS? Now, for Someshwar, I just wanted to repeat myself because you joined late. That what we are doing is we are doing currently chapter number 9. In chapter number 9, what we have covered till now is SRS. SRS means what? Standards on related services. Okay, this is not the assurance services, but other than assurance services, what can be other than assurance services like tax returns, okay, compilation, or there is one thing known as agreed upon procedure. What is agreed upon procedures? Agreed upon procedures where our client is going uh, with the practitioner. Practitioner means what? Practitioner means CA only. That okay, going with the client and the CA is providing them a report on fact basis, on factual basis. Okay, report on factual basis and how they are providing this factual basis report on the by doing agreed upon procedure. Okay, procedures that is being agreed between client and between the CA or between the practitioner. And it is not important for the practitioner to become a auditor of the company for performing SRS. Okay, is it clear? And in this particular chapter, that is chapter number 9 for SRS, there are two SRS that is being covered. One is 4400, one is 44100. One is the agreed upon procedures, and the other one is the related to the compilation. Okay, both are the other related services. Okay, other services that are not assurance services. Is that clear, Someshwar? I have just summarized all the points that we have covered till now. Yes, no, anything? Okay, great. So, what is the objective of this particular SRS? An order to simplify to provide report on factual findings on of agreed upon procedures. No assurance is to be provided on his report. It is to be clear that this is not an assurance. This is not a thing that okay the related services that you performed is correct. No, they have only performed certain things and they are only providing a report on the factual findings. Okay, on the factual findings by doing the agreed upon procedures. Instead, user of the report assess themselves. Okay, so the decision making power, the opinion making power is with the users. Okay, as a practitioner, you only need to provide a report, and on the report you mention only the fact. Okay, and then it will be used by the users, and it is the user to decide whether it is true and fair or not, whether it is correct or not, or whatever opinion they wanted to make over the over these things. Okay, so the user of the report assess themselves the procedures and the findings of the report and to draw their own conclusion. Okay, from the work done by the audit. The report usually restrict to those parties that have agreed to the procedures to be performed since others are unaware of the reasons of performance may be misinterpreted the results. So normally these agreed upon procedures is being done only for certain parties, not for general public. Okay, so only that certain parties, suppose maybe creditors, know that okay why this particular report has been put in our case. So it is not mainly for the general public, but it is for the specific users of that particular report, so that they can know that why this particular report has been formed, and so that they cannot misinterpret the result. Okay. So now, um, the objective of agreed upon procedure is to carry out the procedures, okay, of an audit nature, which an auditor of the entity, uh, and an appropriate third party have been agreed to report on factual findings. No assurance is provided on such report. Such agreed upon procedures engagement are non-assurance engagements. Now, what is audit versus agreed upon procedures? The key difference between audit and agreed upon procedures is that of assurance. An audit expresses an opinion, right, and provides assurance to the user. However, agreed upon procedures only report factual findings of the agreed upon procedures provided. No assurance is being given to the users. Instead, the user has to draw their conclusion based on the factual findings. For example, if there is any agreed upon procedures of the engagement for the validity of the accounts payable, then how the practitioner will proceed towards it? He will compare major supplier, the amount outstanding as of the date. Okay, so he will say that okay, what are the major suppliers, what is the amount that is outstanding. Okay, uh, in the trial balance, from the trial balance, then he will obtain supplier statement, that is the third party statement. Okay, and his confirmation, that is confirmation from the supplier, and he will see that okay, as per the third party statement, as per the confirmation that is received on the outstanding, how much the amount is outstanding, and then he will compare such statement and confirmation with the trial balance. Okay, he will compare them both and give a factual report that okay, as per trial balance, the amount is this, and as per the third party confirmation, the amount is this. And now we will not make any conclusion, etc. The conclusion is to be made by the user. Okay, the user of that particular agreed upon procedure report. Are you guys able to understand what is the key difference? Key difference of assurance. That no assurance, no conclusion has been drawn here. Okay, great guys. So, general agreed upon procedures generally, even if so the auditor needs to comply with the code of ethics that is issued by ICI, and also they need to perform certain responsibility like integrity, objectivity, professional due care, confidentiality, professional conduct, and technical standards. Independence is not a requirement on agreed upon procedures. That I have already told you that independence is not that much required. Because why? Because it's not an assurance, right? You are not providing any opinion. You are only providing facts. Now, you do not have any biasness into it. That is why independence is not a requirement for this particular SRS. However, the terms of objective of the engagement may require auditor to comply with the independence requirement of Code of Ethics issued by the Institute of Chartered Accountants of India, where the auditor is not independent. A statement to that effect should be made in the report in factual findings. However, if the particular CA is not independent because he needs to comply with the Code of Ethics, right? So, if the particular CA is not at all independent, that doesn't mean that he should not take that particular assignment. He can take that particular assignment and only mention a statement that okay, he is not that independent, this particular company, and he should mention the same in the factual report. But what conclusion needs to be drawn out of it is from the user point of view. Define the term of the engagement. So first step is to defining the terms of engagement, that means agreed upon procedure. The auditor should ensure with the representative of the entity or the other specified party who received the copy of factual findings that there is a clear understanding regarding to the agreed upon procedures and the conditions of the engagement. So matters to be agreed include the following. Before accepting any engagement, okay, before accepting any engagement, please repeat. Okay, what do you want me to repeat? Do you want to repeat anything? Clear? Okay, great. So, matters to be agreed include the following things. Before accepting any related services, you need to make sure that there is a clear understanding between you and between the users and between the client, that okay, what all procedures are agreed upon. Okay, so matters to be agreed include the nature of engagement. That okay, what kind of engagement this is. The fact that procedures performed will not constitute an audit or review. You need to make sure that there is no audit, there is no assurance will be expressed. You need to state the purpose of the engagement. Okay, why this particular SRS will be there? Why you are performing this thing? Why you need this particular report? What is the purpose of this engagement? Identification of financial information on which you are performing this particular procedures. Like in our example, we have taken accounts payable or maybe supplier. Okay, so financial information, you need to identify that okay, we are performing this agreed upon procedure in which financial information. Okay, and then nature, time and extent of specific procedures to be applied. Okay, and the limitations on distribution on factual findings. That means what? You need to limit it. That okay, not it is not for general public. Okay, it is not for general public. The limitation on distribution of this report. This report is only to be distributed among only those who are the user, who understand the purpose, who understand the agreed upon procedures. Okay, this particular report is not for distribution. Okay, there is limitation on the distribution of this report of factual findings when such limitation would be in conflict with a legal requirement if any auditor would not accept the engagement. Now, it will be possible that the client or law by itself is not allowed the limitation of distribution, then in that case, you do not need to accept that particular engagement. Why? Because because the entity might show that okay, a CA has given this particular report. So, general public might get confused between the audit report or this reporting. Okay, there is no confusion, there is no assurance. The person is not at all independent, etc. So, there must be limitation on distribution of this report of actual findings. Okay, so only after completing of all these things, only after getting the knowledge of all these things, that okay, what is the nature of engagement, what is the purpose of this engagement, identification of financial information on which this agreed upon procedure will apply, nature, time, and those procedures to be applied, and the limitation of distribution, the particular engagement needs to be accepted. Is it clear, guys? Okay, great. So matters to be included in engagement letter includes, you need to make the engagement letter and make sure all these things are included into this, because it is most important for the client to understand all these things. So what matters to be included in the engagement letter is the listing of procedures to be performed, and statement of distribution of report would be restricted. These two things should be mentioned in the engagement letter. Now, after issuing of engagement letter, what you do? Okay, engagement letter is being issued and you have accepted the particular engagement, then what you will do? Then you will do the planning of that particular agreed upon procedures. After planning, you will start with the procedures and start getting the evidences. Okay, so like in our example, how they will find the suppliers, evidences, etc. So he has get the third party statement or external statement, etc. So what is this? This is the procedure part or gathering evidences. Okay, evidence gathering activities. So how he can do this evidence gathering activities? He can do inquiry, analysis, reconstitution, comparison, observation, inspection, or obtaining confirmation. In our example, he was obtaining confirmation. Okay, so he can do all these procedures. Okay, simple way. He needs to make sure that all persons are understanding the same thing. Then he needs to prepare what? Engagement letter, right? And then he needs to plan the particular engagement. After that, he needs to do the procedures and gather evidences. How he will gather the evidences? By inquiry, inspection, recalculation, getting confirmations, etc. Okay, and after that, he needs to do what? He needs to report the thing, right? So in the reporting, there what the things in the reporting will include. One thing, it is not an assurance, it is a fact finding report. Second thing, the person is independent or not, this thing needs to be mentioned. Now, the third thing is uh, what is a format? So, format is title, addressee, then identification of specific financial or non-financial information on which the agreed upon procedures is applied, right? It needs to identify that, okay, we are doing this agreed upon procedure on accounts payable, on suppliers, or on which financial or non-financial information. Then you need to make a statement that, okay, we are only performing the agreed upon procedures. Okay, then you need to make a statement, then it is performed in accordance with the standards on related services. That, okay, whatever procedures that we have performed is as per SRS, right? Then you need to identify the purpose on through which the agreed upon procedure is being performed. Then you need to list down the specific procedures that you have performed. After that, you will give a description that, okay, after doing the procedures, what facts we have find, or sufficient details of errors and exception found. You need to give all the facts in the particular report. And after that, a statement that procedures performed do not constitute a audit, review, assurance, means you need to make sure by your end that this report is not an audit, this report is not a review, this report is not an assurance. Then the statement that auditor performed additional procedures, if there is any additional procedures is performed by the auditor, any audit, any review, other matters that comes to your mind, you need to report all the facts. The statement that report is restricted to those parties. You also need to mention that, okay, this report is only for the use of the suppliers or only for the use of the company. Internal matters means who are the person who are the users of this particular report. Then a statement when applicable, the reports related to the only element. You also need to make sure that, okay, in this report we have only taken care of these particular elements or this particular account or this particular financial or non-financial information. In our case, it was accounts payable or the suppliers. And then the three last, very much important: date, uh, place, place of signature, and where the signature is done, and the last operator's signature. Okay, this is how we will do the reporting, and this should be the content of the reporting. I would say that for this particular SRS, this is important. Might be direct question might have come, reporting might have come in your examination. So I would say to learn the sequence would be easy. The title, addressee, and then you need to find out that, okay, on which you are giving particular assurance. What is the agreed amount procedures you have done as per SRS? What is the purpose? You need what procedures you have performed. Okay, after performing the procedures, what are the findings you have done? Okay, that this is not a assurance or any review, right? After that, any additional performance, you need to make sure that it is restricted. Then again, you need to see that, okay, which element it is related. And the last three things. Is it clear? Report. And then last, you need to do the documentation as per SRS. Okay, great. Test of understanding question. A company asks you to carry out a process of confirmation on its accounts receivable to finding out balances in excess of 10 lakhs in its books of account at the close of the year. Um, the work to be performed only involves preparing and sending confirmation requests to such party, analysis of variations on the receipt of confirmation, and submitting the report in accordance with the professional standard. What points you have to keep in mind while including the report specific to such engagement? Now, say it is a question about reporting. That, okay, what things you keep in mind to include in the report? That means you need to write it down all the points in the report that you need to mention in this particular engagement. So you need to find out that, okay, it is related with SRS. In SRS, it is related with the agreed upon procedures because you are agreeing this thing. Then also you can mention whole of the procedures that okay, we will do the engagement, or you can also be very much specific related to reports only. Is it clear, guys? Are you able to understand the question and the answer? Okay, great. So now we have come to the next SRA 4410 related to compilation engagement. As the name suggests, what do you think about compilation? If I say you compilation engagement, you need to do the compilation. What do you understand by this? Financial statement, making of financial statement, making the compilations, right? So when the engagement assists the management with preparation and presentation of the historical financial information without obtaining any assurance of the information, means what the practitioner is helping the company. He is helping in preparation and presentation of the financial information, basically doing the accounting thing, basically compilation of the accounts, right? You are compiling someone accounts, means you are preparing a presentation of the historical financial data. That means you are preparing their accounts, maintaining their accounts. It applies to compilation engagement of historical financial data, compilation engagement of financial information other than historical financial information, or compilation engagement of non-financial information can be performed under this standard after necessary adaptation. So, other than non-historical financial consolidation, yes, you can say consolidation is also a kind of compilation only. Okay, so when you are doing related services means you are preparing something, you are presenting something, that is also covered in your consolidation as well. Okay, you are preparing what you are preparing and presenting something from the historical financial data. Okay, but other than historical financial data, can you perform something compilation related to non-financial information? Yes, you can also do that after necessary action, means after doing necessary alteration accordingly. So SQC 1 is applicable to all standards, right? You already know that standards of quality control is applicable. Since SRS 114410 is also an engagement standard, SRS is applicable to the firm who is do compilation engagement. Okay, so the firm who is doing compilation engagement, what do you call these kinds of forms in general English language? You have opened the form that do compilation engagement. What this normal form is called in normal language? As per your understanding only, this is not any question, this just for your normal understanding. Accounting firm, right? So what they are doing accounting basically. So what is compilation? Compilation engagement is an engagement where a practitioner applies accounting and financial reporting expertise to assist the management in what? In preparation and presentation of financial information of an entity in accordance with the applicable financial reporting framework and issues a report. Right. The management may request the professional accountant in public practice to assist with preparation and presentation of the entity. Now, financial information that is subject to compilation may require for various purposes, including mandatory periodic financial reporting for laws and regulation, maybe like quarterly report, okay, annual reporting. For the purpose mandatory financial reporting as per laws and regulations for management which charge the governance prepared on basis of appropriate purpose for internal use. So now there are various companies who prepare internal accounts, internal quarter reports. So all these things are what? All these things are helping them out, right? Periodic financial reporting or for transactional purpose, for mergers, acquisition, etc. All these things are included in what? All these things are included in the compilation engagements. So compilation engagement is also it is also a non-assurance engagement. Compilation engagement does not require the practitioner to verify the accuracy or the completeness of the information. Now, suppose you are doing the accounts. So in accounts, you are not going to verify anything. Okay, whatever invoices is being presented to you, as per that only you will prepare the accounts. So this is not an assurance engagement. You do not need to verify anything. You do not need to see the accuracy, the completeness of the information that is provided by the management for the compilation. Otherwise, gather any evidences to express an opinion or give any conclusion, etc. Right? Is it clear to you? Are you able to understand this? Yes, no. That okay, you do not need to give any kind of conclusion, etc. You do not need to verify anything. So now what is the objective of this particular SRS? The objective of this particular SRS is to apply accounting and financial reporting expertise to help the management in preparation of their financial information and to report accordance with the SRS. Now what is the scope of this compilation engagement? That management retains the responsibility for the financial information. That means who is responsible for the data being provided to you for preparation of the compilation? Are you responsible that whatever accounts that you have prepared is true and fair, or the management is responsible? You tell me. Suppose you are doing the account now, whether these accounts are true and fair is the responsibility of you or the management who is providing you this information. So management is responsible, right? So management retains the responsibility of the financial information on which the accounts are prepared and presented. And different financial reporting framework can be used. May be possible that the management for their internal use using certain other financial reporting framework. Now, when Index is not applicable to various entities, then also various entities prepare their financial statement as per Index. Why they have prepared this kind of thing? Because they have to, maybe they have to comply with that. Maybe they have to consolidate their accounts in other case with their holding company, right? So in that case, it might be possible that they use other financial reporting framework. So as a someone who is compiling, as a someone who is only do the compilation engagement, you are not responsible for which financial reporting framework you are adopting. Different financial reporting framework can be used to prepare and presented the financial information. Okay, so ethical requirement, yes, you need to make sure that you are following all the ethical requirements. But as the case is non-assurance, independent do not required in this particular case as well. Now, as we have learned in the earlier SRS, in that also what we are doing, firstly, what procedure we are performing, firstly, we are doing the engagement acceptance and continuance thing. That means we are doing engagement letter. Okay. So the practitioner shall not accept the engagement unless the practitioner has agreed to the terms of engagement letter and engaging party, if different, including the intended use and distribution of financial information, any restriction on use or distribution. So you need to make sure that okay, this particular financial information is to be used by whom. Okay, if there is a restriction that applies to it, where applicable, means it's possible that there are some, like I have told you, Ind AS cases other than other FRS, other financial reporting framework basis. If accounts is being prepared, it might be possible that there is some uh, restriction that is applicable uses. Okay, where applicable means it is not 100% applicable. Identification of reporting framework is to identify that okay, on which basis we need to prepare the accounts. You need to make sure the objective and scope of compilation engagement. You need to make sure the responsibility of practitioner, that okay, what is my responsibility, that I need to follow the relevant ethical requirement. And you need to make sure that something is the responsibility of the management. Responsibility of the management is what? To give you the financial information that is true and correct. The management is responsible for internal control. The management is responsible for the accuracy and the completeness of the records, documents, etc. and any judgment, etc. Then who is responsible? The management is responsible. If the management is not taking this responsibility, then you should not accept this particular engagement. Okay, and also you need to agree with the management that okay, what kind and content of report I would tell you, because because before accepting any accounts work, you need to consult with the management that okay, you need quarter one report, you need quarter two report, then it might be possible that we half yearly report. But what kind of reporting do they need from you? All these things, first of all, you need to agree, and after, you need to accept and agree, and after only that you need to continue with such engagement. Is it clear, guys? Are you able to understand this part? Okay, great. And after that, you need to perform the engagement. Now, how we perform an compilation engagement? So first of all, you will get the understanding of the entity. Okay, what kind of business they are, what kind of operations they are, what are the applicable financial reporting framework to the industry. Then you need to compile the financial information that okay, what kind of information do you need, what kinds of reports, documents, other information, documents, what kind of things that you need in order to compile the financial information. Then you need to discuss the management and those charged with the governance if anything you wanted to discuss with them. Then, period to completion of compilation engagement, the practitioner shall read the compiled financial information and write of the practitioner understanding of the entity, business and operation, and applicable financial reporting framework. Means before sending your compilation, you need to read it and make sure that it is correct. Okay, in light of your understanding. Okay, whatever understanding you have got, it is as per the understanding only. In the course of compilation engagement, the practitioner become aware that the records, document, explanation, and the documents, including significant judgment, provided by the management are incomplete, inaccurate, otherwise unsatisfactory. Then the practitioner need to bring attention to the management. If as per the knowledge of the accountant, it might be possible of the practitioner. It might be possible that he understands that okay, this information is incorrect, this information is inaccurate, this information is unsatisfactory, then you need to bring to the notice management that okay, this is something incorrect, or I need some more information. Now, if the practitioner is unable to complete the engagement because the management has failed to provide the required information as requested by the practitioner, then the practitioner needs to do what? He needs to withdraw from the engagement and inform the management and those charged with the governance the reason for withdrawal. Why? Because the management is unable to provide him the sufficient information. If the practitioner becomes aware during the course of the engagement that the compilation of financial information does not adequately refer to the description of applicable FRM or the amendment to the compiled financial information are required for financial information do not be materially misstated or the compilation and the financial information is otherwise misleading, then the practitioner shall propose the appropriate amendment to the management. That means if he is saying that okay, misleading, this is misstated, it is not for applicable FR, then you need to ask the management to amend accordingly. But if the management decline, then you can withdraw from the engagement. Okay. If the withdrawal of the engagement is not possible, the practitioner has determined its professional and legal responsibility as applicable in the circumstances. So you should see that okay, what is my responsibility in this case if I can't withdraw my engagement. The practitioner shall also obtain acknowledgement from the management and those charged with the governance that have taken the responsibility for the final version of compiled financial information, that okay, I am not responsible for this particular compiled financial information, but you are responsible because you are the one who is provided me the required information. Okay, and I am not responsible on the basis on which the financial information has or the compilation has been prepared. After preparation, again you need to communicate with management and those charged with the governance. During the course of compilation engagement, all the matters you need to bring sufficient importance, merit, or the attention to the who shall be the governance. And at last, what he needs to report the practitioner report. Practitioner report he needs to submit. The importance purpose of practitioner report is to clearly communicate the nature of the compilation engagement, the practitioner roles and responsibility in the engagement, and the practitioner report is not a vehicle to express an opinion or conclusion on financial information in any form. That means he is not doing any conclusion, etc. But he is only providing the compilation. Right? Is it clear, guys? Are you able to understand performing how it is going to perform? Okay, great. Then, likewise, we have learned in the SRS 4400. Likewise, what kind of report is going to be submitted by the practitioner in 4410. So the title of the report, the addressee, the statement that practitioner only compiled the financial information, he needs to describe the responsibility of the management. That okay, what are the responsibility of the management? What is the applicable financial reporting framework on the basis of which the financial statement is being compiled? he needs to identify the financial information, the title of each element that he has prepared. That okay, he has prepared balance sheet, he has prepared P&L, he has prepared cash flow, etc. uh, a description of practitioner responsibility. Now you also need to show your responsibility that okay, I have prepared all the things as per applicable SRS. Okay, with the relevant ethical requirement I have followed, it is my responsibility to follow. Okay, to describe what compilation engagement entitles in accordance with SRS. Okay, you need to describe all the compilation engagement. You need to do explanation that the compilation engagement is not an assurance engagement. Okay, you need to make sure that this is not an assurance engagement. You need to mention in the report. And accordingly, the practitioner do not express an audit opinion. If the financial information is prepared as per special purpose financial reporting framework. Now, what is special purpose financial reporting framework? It is a framework that is used for some special purpose only. Like suppose maybe creditors, etc. We will learn more in Essay 800 series. So you need to describe that okay, what purpose for which this financial information is compiled, and you have to draw the attention of the readers that financial information has been prepared as per special purpose framework and not applicable FR. Okay, and then again date, signature, and place of signature. Now you all know that engagement level quality control is applicable in this particular case. So engagement partner need to take the responsibility of the quality, right, of the overall quality of the compilation engagement and the engagement being performed in accordance with the quality control procedures. After that, you need to do the documentation of certain things, the significant matters that arise during by doing the compilation, and those matters, how those matters are being addressed. Okay, what all the significant matters and how it is being addressed by the practitioner. Record how compilation compile financial information, reconcile with the underlying record that okay, whatever financial information that we have prepared is reconciled with the underlying records, documents, etc. And the copy of final version of financial information with the management or of the governance has acknowledged their responsibility and the practitioner reports. All these things you need to mention the documentation of the same because it might be important for you in order to get the legal help if it is required. So practitioner may also include the engagement documentation, a copy of entities, trial balance, significant accounting records, etc. All these things you need to take as a documentation. Okay, is it clear, guys? It is very very simple. Essays, both of the things. The sequence is very much similar. Getting the engagement letter, okay, and agree. In which case to agree, in which case not to agree, and then planning. After that, planning is second thing because only one para is given over planning, and after that, performance, procedures, cutting evidences, etc. Okay, after that, reporting. And in report, what kind of uh, report you will perform, what will be the content of reporting, right? And after that, documentation. And also in both of the SRS, you can mention okay, SRS 400, SRS 4410, that okay, what is the responsibility of management and what is the responsibility of our practitioner. Okay, in both of the cases, independence is not required, right? In both of the cases, you need to make sure to include that this is not an assurance, this is not a review, right? So by comparing both of them, you can easily be able to remember. You can also make a comparison sheet and give all these details. So I think 1 or 2 pages you can easily be able to cover this particular chapter, right? And the questions is also very very simple because this particular um, chapter is also very much simple. Is it clear? Chapter number 9? Yes, no. So that we can move forward towards our next chapter very very fast. Okay, great guys.